The Bank of Canada cut interest rates today, and most people are expecting the Fed in the US to cut interest rates later this year. I know a lot of people are excited about this, but let's talk about why this isn't always a good thing. The role of interest rate cuts is usually less about helping the average consumer and more about fixing something that's potentially broken in the economy. This is actually a really interesting chart here. It's showing the total delinquent mortgages in Canada and how that correlates to interest rate cuts. From this chart, we can see that usually when interest rates are cut, we see a surge in mortgage delinquencies. And I'm thinking that this 25 basis point drop is probably too little too late for a lot of consumers. From a stock market perspective, you can either see this as being concerning or potentially a really good opportunity, because some analysts believe that this cut in interest rates, or the belief that there will be further cuts in interest rates, will cause a melt up in the stock market, which is basically when the stock market goes up unexpectedly, driven partly by a stampede of investors who don't want to miss out on its rise, rather than by fundamental improvements in the economy. Basically, a melt-up is an unsustainable increase in prices, and they're often followed by a painful decline. Obviously, we cannot time the market, but if we find ourselves in an opportune position where the market has dropped significantly, we could set ourselves up to make a lot of money in a short period of time. For reference, this is my Wealthsimple account that I opened just a couple years ago. And because I was able to get in while stock prices were really low, I've had a really great return in a really short period of time. So what am I actually doing right now to prepare for this? Well, currently I am still investing more into public REITs, so my REIT ETFs. A lot of those are at really low prices right now because of the rise in interest rates. Usually there's an inverse relationship between REIT prices and interest rates. But as rates start to come back down, I'm expecting those REITs to go back up, and I'm hoping to make a lot of money. I'm also keeping an opportunity fund. This is money that I have set aside for if and when a market crash happens, and I'm keeping that in a money market fund and some in a cashable GIC. I went from $40,000 in debt to a millionaire at 30, and now I'm teaching you guys everything that I know. If you want to learn more, we have a free investing masterclass on our website under freebies.